But let's introduce the first topic of conversations today as well, and that's oil and gas. There's a lot going on, and not just in the oil space, of course. So while we have an advance in crude in general, but now we have the gas subsector, which is also in focus. Mika, what's in store here?
Yeah. So Nifty Oil and Gas is one of the top sectoral, counters today. It's reached an intraday high of 1.12% at 13,607.2. The index is also up 42% year to date, 73% in the year. And we have multiple companies that are gaining: Gujarat Gas, Aegis Logistics, some of the OMC names like Hindustan Petroleum and Indian Oil. In terms of the volume picture, also, Agam, could you maybe just give us the volume pictures of the counters today?
Yes, absolutely. So we actually do have a lot in terms of the way things are panning out when it comes to gains. Sure enough, on an intraday basis, we've seen names like Gujarat Gas make a 14% high. Aegis Logistics, which is actually a logistics company, but this is pertaining to the movement of oil and gas, that was up as much as 8.1%, 4.5% gains for HPCL and Gujarat State Petronet. Also, at one point in time, was up by as much as 4.7%. Volumes naturally have surged for a lot of them, but I think two names that do actually stand out is Gujarat Gas and Gujarat State Petronet, and perhaps for the right reasons. That's because they are also in the news, Mika.
Yes, and this is behind on the back of a latest scheme of arrangement that has been announced, where the main aim is for the government of Gujarat to consolidate all its energy businesses. Now, the first part of this entire scheme is Gujarat State Petroleum Corporation, Gujarat State Petronet, and JSPC Energy will merge into Gujarat Gas, and then after this, Gujarat Gas will demerge the transmission business, and a separate entity called GSPC Transmission will be listed on exchanges. Now, in total, Gujarat Gas will issue around 78.66 crore shares, and these are new shares, but around 53 crores of shares will get cancelled out because all these companies have stake in each other, and this entire scheme is to be completed by August of 2025. When we talk about the share exchange ratio, the merger of JSPC into Gujarat Gas, they'll issue 10 Gujarat Gas shares for every 305 shares held. For GSPL, issuance of 10 Gujarat Gas shares for every 13 shares held in the company. For the merger of JSPC Energy, there's no issuance of shares because it is a wholly subsidiary of the company itself. And then when the demerger of the JSPL transmission will happen, the company will issue 1 share for every 3 shares previously held in Gujarat Gas. But Agam, in terms of the valuation picture, how is it looking like?
Sure. So let's start by taking a look at the Gujarat State Petronet. Of course, at the moment, that company is valued around 26,000 crores. Now, moving in, this actually entails the core business standing at around 3,500 crores and investments worth anywhere between 24,000 to 25,000 crores. Moving in, Gujarat State Petroleum Corp is valued at around 21,000 crores with an implied EV EBITDA multiple standing at around 6.8 times. And GSPL Transmission, again, valued at around 3,500 crores, which is 5 times the current net profit run rate. But, this is as far as valuations go. Anushi, what are brokerages making of this?
Right, Agam. So if you look at the brokerage's view and what they have to say, it's not a clear direction if it's like a bull or a bear. It's a mixed direction that we are looking at. Like if you look at MKIFL, they've maintained a reduced rating on this with a target price of about 600. So currently it's at flat levels while if you look at Jefferies, they have the most bearish view with an underperform rating and a target price of 450, implying about a 26% of a downtick from the yesterday's closing price if we look at. But do note that the rating that we are looking at is also on the basis of the Q1 numbers that had earlier come out. But just onto what else they are saying, Equirus and Antique Broking, they maintain a positive view on this, seeing a 667 to 726 of a target price, both implying about 10 to 20% of a target. But coming to what these brokerages are essentially saying, first, if you look at Jefferies, while they maintain the underperform rating, they do expect an improvement in the margin profile for Gujarat Gas, and this is after the integration of the gas trading business which will happen. But however, the volatility on this would remain on the higher side, so that is definitely a watch out for. IIFL also, while the levers for the value creation will lead to some kind of cost reduction, that is there, but again the volatility comes. But if you look at the positive side, that is Antique and Equirus, now they are saying that the merger is value accretive for the business, especially for a company like Gujarat Gas, and Equirus is also in the view that this is a well thought out merger that we are looking in the street as of now. So this is what the brokerages are saying.
Yeah, I guess this, even though the brokerages are bearish, the street is very positive, and I feel it's key to note down the benefits and the drawbacks. Now, in terms of benefits, management stated that when you talk about the merged businesses, all the combined cash flows will help Gujarat Gas fund future growth opportunities organically and inorganically. The merger will also help in better pricing power for the company. It also eliminates some key gas trading costs that Gujarat Gas currently has with Gujarat Petroleum Corporation. And it also avoids double taxation. And one of the main things is the company, which is Gujarat Gas, may not have to pay taxes for the next 4 years because it can utilize the accumulated net losses of Gujarat State Petroleum Corporation. When you talk in terms of a drawback, like Anushi pointed out, it does expose Gujarat Gas to a more riskier, volatile and regulated business when it comes to gas trading, the pipeline business, as well as exploration and production. And the merger, we spoke to analysts in the morning, the merger can also face some regulatory challenges. And for the transmission business that will be demerged later, the tariff challenges will remain. But something that's also been buzzing, Anushi, is Aegis Logistics.
Absolutely. If you look at the stock, it's up around 7% and higher volumes on this counter that we are looking at. But you can't say the same for its overall year performance. The stock is up over 3%. But let's understand what is the company doing fundamentally, what's working for the company. Now, the management has a strong guidance that is of about 25 to 30% of a compounded growth rate that they're looking at. This is for a next 3 years growth timeline that we are looking at, and again, this is on the back of a lot of capacity additions that are taking place, especially in two of the divisions, that is liquid and gas division. So that is definitely a watch out point for the company. Capex plans to support this are also on the stronger side. 4,500 planned by about 4,500 crore planned by about FY27, of which 50% is already underway. So this is what is working for Aegis Logistics as we speak.
Right. Well, let's also take a look at some of your, downstream companies. So your OMCs in this case are also in focus. And, the reason here that we are talking about is that I think it would be pertinent to talk about the entire sector. So hence, we're also giving you an idea about how things are faring as far as OMCs go. Now, at the moment, we do have some initial expectations from the second quarter based on the updates that we are getting so far. So we do understand refining segment is likely to show an improvement on the benchmark Singapore GRMs, which have rebounded. And volume growth is, of course, key in terms of selling prices, which are actually capped. So it will essentially be volume growth, which would likely drive your top line going ahead. Also, PPAC data is seen to grow, but that'll again be based on the kind of traction that we have in the month gone by, that's August of 2024. And based on that, we do have Morgan Stanley, who has an upgrade rating when it comes to or rather upgraded their ratings when it comes to Indian OMCs, and they maintain an overweight on global and domestic tailwinds, and IOC, BPC, as well as HPCL target to raise anywhere between 205 to 410 and 506 rupees per share respectively there. And in general, it does seem like at least one of those broking houses is positive as far as your OMCs are concerned. But on the other hand, so far, losses for upstream companies?
Yes, that's pack in the oil and gas space that's not been doing so well right now. We have Oil India, which is one of the top losers today, intraday low of 3.2%, and we also have ONGC, which was under pressure. Now, one of the main things is how oil prices have been moving. Now, Brent crude prices, which is a very key commodity for these companies, is down 12% in the Q2 FY25 so far. Obviously, these companies do have buffer and hedging strategies, but this does have an impact because it kind of limits the company's sales realizations. Already, because of the kind of landscape that the Indian government has in terms of windfall taxes, Oil India and ONGC's sales realizations, means the amount of money they can earn per barrel of oil sold, is capped at $75 per barrel. So any dip in Brent crude prices below this range is negative for the company. And production growth is also key for the companies. Now, Q1 saw a very weak quarter in terms of both crude oil and oil and gas production. So it's very key for these companies to kind of maintain and actually reach the volume guidances that they have set. But I think to wrap it around, Anushi, what are valuations saying for the next 2 years?
So let's speak about the top 5 performance which are there, and we'll discuss their valuations. Now, the companies that I'm talking about have in the year-to-date performance, if you look at, have gained around 60% to 187%, with Oil India the top performer over here. Now, coming to the valuation picture, let's start with Oil India. 11x is the current trailing P that we are looking at, which is expected to go down by about 9.2x, while it is different case scenario for HPCL or even a Petronet LNG, while their valuations remain majorly in line for Petronet LNG. Coming to Bharat Petroleum also, now while the current P stands at about 6x, this is expected to go up at 10x by FY25 end, and and remain around those levels for FY26 as well. Oil and natural gas, similar sort of trajectory, 4x, which is expected to continue, and this is about 7.8x that they're seeing at FY26 end. But to speak more on what is the street building on this and what is it saying more, so if you look at an Oil India and ONGC, valuations continue to suggest earning growth, with the street expecting that the volumes that we are looking at will drive the performance going forward, and this is on the back of the key assets seeing some improvement. Petronet LNG also valuations suggest earning growth, and this is aided by the LNG performance as we speak. And again, so LNG import prices in moderation will remain as a positive for the company. While we come to counters like HPCL and BPCL, valuations, however, suggested earnings degrowth in this case scenario, and companies are expected to show a weaker performance across the segments. Companies are also overseeing an average yearly loss of about 11,000 crore on the LPG sales, which has till date not received government subsidy as we speak. So this is the overall outlook and the valuation picture that we are building on these 5 counters.
Yes, thank you, Anishi, for giving us those details. And I think at that note, you've spoken about the oil and gas sector, but